Citigroup did great. Probably the best of the three that reported today. Really strong results across all of its businesses, markets, wealth, services. Really interestingly, their returns on tangible equity, 13.5%, much higher than their 10 to 11% that they're targeting for the year. So starting off the year great. We'd expect to hear more from management on expectations for returns going forward.
It's nice. I mean, the stock has doubled over the past 12 months. It's the turnaround is there, which has been long way coming since the great financial crisis, arguably. How do you position, or how does Citigroup position itself vis-a-vis JPMorgan, Bank of America, even the Goldmans and the Morgan Stanleys of the world? How does Citi position itself nowadays?
Right. So really strong areas in markets, particularly in rates trading, really strong services business, moving cash around for their corporate clients. That's been the crown jewel for the longest time. They're weaker in the U.S., specifically in consumer banking. They don't have a really strong branch presence. So there was a Bloomberg News article about a month ago saying that they might be interested in buying a large regional bank just to bolster their deposit presence because
there's a Citi branch like everywhere.
If you're in New York, yes.
Okay.
They are not in sort of like your areas that you're.
Are they in the Sun Belt where
they are not? So
really?
they've retreated and gotten rid of a lot of their branches, which now has been to their detriment.
Do they have a Plano, Texas? I mean, to Paul's good question. I mean, is what's coming? Is Jane Fraser's going to say, okay, we need to migrate from New York to somewhere else? Is that what's ahead?
What JPMorgan has shown, and to your earlier question, Paul, is that JPMorgan is growing their branches everywhere. You can look in their annual shareholder letter that just came out last week, and they talked about Alabama, of all places, growing their branches there.
I saw that. I read the whole thing.
Right. And so Citigroup just doesn't have that. They have a very thin branch presence that's really just focused on the large metro markets.
The heritage is John Reed and Riston, and it's international banking. Mexico, they got rid of it.
Right.
Is that their future, is to really lead on international banking?
Well, they're reducing their footprint internationally as well. They only have about 51% stake in their Mexican business now.
Well, I'm lost. Then what are they doing?
Right. So simplifying their businesses, focusing on returns, and then potentially growing the U.S. deposit base.
Yeah, I mean, again, the stock's doubled over the last year. It's taken so long. I mean, no kid. It's even before the great financial crisis. I sold my stock the second as I'm walking out the door, I'm selling my stock.
Can we do a shout out? Mike Mayo. He's been long Citigroup back when he was fat, before he did the weightlifting and all that stuff. Back when he was a chubby old lad, he was long Citigroup, but finally it's paid off in spades.
Absolutely. So what's the takeaway from just today with the big banks? Business is good, right?
Business is great. I think the market's quibbling over some net interest income noise for JPMorgan that really in the grand scheme of things doesn't really move the needle for us. And then Wells Fargo had a bit of some margin compression, so there's going to be questions about that on the call. But overall, everything looks really good.
How the regionals doing? What you used to cover?
Yeah, still cover,
back when you had a real job.
Less of an emphasis, I guess, today. Regionals are going to do great. Some of the trends that we're talking about for the largest banks are happening for the regional as well. Strong balance sheet growth, particularly in commercial lending. Your core small business borrower is coming back, and so that's been lifting results for the regionals. We expect for this year, margins are going to be stable, and then you have shareholder returns in dividends and buybacks.